Hey everyone, this is Joshua here with Invest with Matt, and today I wanted to take just a few minutes to cover Robinhood earnings. I really hadn't had a chance to do a video in a while. Now that we're post Q1 earnings, I figured now's a good time to do a wellness check and maybe talk about the future a little bit. Also, I wanted to talk about HIMS. I'm not invested in HIMS, but I did want to cover it since there seems to be a lot of interest heading into earnings this week. I've seen a lot of Twitter posts. I did take the time to watch a couple of videos from some of the people I follow just to see what their take was on it and why they're bullish. I see a lot of bullishness and not much bearishness, despite the short interest. You'd be surprised just based off of social media versus what you actually see when you dig into um, some of the shorts numbers on the stock. But let's get into Robinhood first. It should be pretty quick. I don't have a whole lot to go through here. I did just want to touch on the breakdown for revenues. You can see here the net income was 336 for the quarter. It was a lot lower than I had expected. OPEX was a lot higher this quarter than it was previously, so that really cut into the net income. Even if you take out the tax credit that really boosted their Q4, net income would have been around 500 to 600 million without that. 400 million that they got. So you can see, $150 million drop. Most of that was just in additional OPEX expenses. And then also in crypto volumes dropping off, and crypto in general revenues were just not as high, which was expected. The revenue that I had going into earnings, and I was one of the few people projecting them to beat. A lot of the folks that I follow were projecting much, much lower than the 920s. Mine was high. I think it was a 952, and that was solely pretty much for crypto. I was projecting 270s for the crypto. It came into the 250s, and there's your $25 million difference in the revenue that I was looking at. And then like I said, net income was way off, but OPEX was a lot higher than I expected and than what we had seen. And taxes were also a lot higher this quarter than they were previously. And I guess that's something to do with the credits that they were using in past quarters is gone now. So this is just a quick breakdown. If you want to look at it, it's on my Twitter. Overall, pretty good earnings, better than what a lot of retail was expecting, spot on with what Wall Street was expecting. So kudos to the Wall Street guys and gals that were projecting around 920. Great. So with that said, I'm not going to break it down in detail just because, or talk about the call because so many people have already covered it. I don't think it's really worthwhile going over that again. What I did want to talk about though is the future and something that Vlad talked about on the call. It was also followed up in, I know, Teva's video that he did with Vlad yesterday, talking about blockchain and how it can be used. They talked specifically about using it for private equities. This is something I've written posts on. I think it was also, let me see if I can find it here. It was also touched on in another video. I think it was with StockTwits with Katy Perry. It cracks me up. Yeah, so she covered it too. She talked about it. So I just wanted to show you the models and what it would look like if Robinhood was to essentially tokenize everything. And now that is a long ways out. Private equity is probably one of the first things they would look to modeling, like crypto. And like I said in the Tevis video, he talks about, it's essentially would be like an initial coin offering, but for private equity companies. So here's just a quick look at model comparisons. So this is their current revenue model and what they had this past quarter. And you see they get 927. Now, I reduced the volume multipliers down a lot because it looks even crazier if I don't. If you can go through and figure out what the crypto revenue multiplier is, and crypto brings in roughly 39x what equities does on a trading basis. So, while I expect things would be a lot better on a blockchain ecosystem for equities, options, whatever you want to put on there, because you're cutting out a lot of middlemen to execute those transactions and fees and regulations that Robinhood wouldn't have to deal with on the traditional brokerage side that they do now, that they don't have to on the crypto side. And that's why their crypto is so much higher. So yeah, it was 39x last quarter from Q1 earnings is what they made on equity, or on crypto rather, over equities. I adjusted just because a lot of that has to do with spreads. The equities market, options markets are, they're a lot more liquid. The spreads are a lot tighter. I don't think Robinhood would be able to do a 39x in those markets like they do on crypto. That being one of the reasons. Now, I think it would definitely benefit them from a cost, capital expenditure, cost of revenue standpoint. And so I adjusted the multipliers to kind of capture that. The model I used just took what the typical spreads are from equities and options and adjusted the 39x multiplier by that. So you see, I ended up getting around a 10x is what you would see in a blockchain model brokerage system for equities, 3x for crypto, 1x for, or 3x for options, 1x for crypto because it's already on blockchain. Net interest, 1.3x. I think that's just a side effect of the other revenues coming in. So it would have a huge impact on their volume adjusted revenues. I mean, it sounds silly, and this number still might be really high, but if you were to cut this, into a third of what I have here, it's still significantly higher from a margin standpoint and from a revenue, and then of course net income standpoint. Using the numbers I have, you get what this quarter would have been in a blockchain model would have been $2 billion. Annualized, that's 8 billion per year, which would make Robinhood insanely cheap right now, even with the PE hovering around 30, which historically for stocks, that's a pretty healthy PE. So it's just something to consider. This is a long ways off, but it's something they're talking about. It's something Vlad's talked about. It's something people are asking about because I think it will come. Like when it comes, I don't know. But if you're a long-term shareholder, it doesn't really matter. If you're going to hold this stock for 20 years, there's a good chance in 20 years this is going to happen. Will it happen in the next year? Probably not. But like Warren Buffett said at his outro, essentially this past week, what happens in 45 days, in 100 days, it doesn't really matter. For long-term investors who are just trying to pick good stocks with good returns on equity, good valuation, good metrics, it'll play out over the course of decades. And it's one of the reasons why I've been in Hood. It's one of the reasons why I stay in Hood, unless something fundamentally changes with the company. And it would have to be a pretty big change and a shift away from their models that they're on now, and they're targeting, the platforms, the verticals that they're going after. This is just blockchain, right? I don't even have events contracts in here. But in a model like this, everything's going to get boosted several X. So you take their, nearly 1 billion in revenue now, 2X it. And that's what you're seeing. So if you'd have to 2X the valuation of that standpoint. I know it's overly simplistic, but this is just a general idea of where I think brokerages, the market, everything is headed this way. The exchanges will eventually get here. I think Robinhood is just best positioned with their size and with their revenue base, or sorry, not revenue base, customer base, and just the general way it is set up as a platform. They're the most prepared for this scenario to play out. So that's just a touch on that. And then I did a breakdown kind of visual of each, what it looks like. And I mean, it's just a staggering difference between the two. We'll see. Maybe that'll come. When it comes, who knows? One day. Going up, I think that's really it for Robinhood. I want to talk about that. And then the sports betting. This is just another segment. They talked about 20 million annual revenue run rate. And I think that's pretty good to start off with for something that they just launched. Same for futures. I think those things will continue to expand. Retail, I think over time, if they learn how to properly use futures, will like it, especially people with smaller accounts and micro futures. If they're already trading things like SPY options and they want leverage, but they want, I guess, a more controlled form of leverage, in my opinion. There's no pattern day trading. So if you'd only had 15K in your account, you could probably, trade a couple of minis or micros for ES and NASDAQ. And you get the leverage and exposure to the daily fluctuations in indexes. But you could trade it 1,000 times a day if you wanted to, and you're not going to get dinged as a pattern day trader. And I think you'd be surprised at how few people even know that. I would gander that most retail traders don't know that's a thing. But yeah, and you get some leverage. It's almost like and you get trades that 24 hours a day during the week. So you could set stops overnight. And if there was something really bad to happen on a macro level, like another war starts between Pakistan and India and the stock market craps before open. Well, if you're in options, you're SOL. Your options are going to be worthless when the market opens. But if you're in futures, you can set a stop. And if something happens overnight while you're sleeping, your stop will trigger and you won't lose your ass. So I think futures is a thing that people will get into. It take some time to get adoption in the retail community, but they're already projected a $20 million annual, revenue run rate for futures. And then the same for gambling. I wanted to show this chart again just because I think people are underestimating the pension of people's pension to gamble. Gambling from the lows in 2020 of $40 billion annually in the US. This is just the US. And now Robinhood is predominantly US, which is another thing that we can talk about in a minute. This past year was almost $66 billion in gambling revenue. And this is just what's reported. So I'm sure there's many, many billions of dollars of gambling that are done off the books with a bookie still. Some states it's still not really legalized for use for some of these apps. Certain types of sports events you can't bet on in certain states, things like that. So, I mean, it's a huge addressable market. Robinhood would only need to capture a small portion of this. They're sharing revenues with Kalshi right now. Maybe one day they build their own platform. Maybe they buy Kalshi. Doesn't really matter. I think it's easily a 9-figure revenue segment for them in the next 3 years. And people are like, oh, but crypto, it's going down. The volumes are drying up. Well, they're offsetting some of that. Their net interests are going up as accounts come on. They keep bringing on gold members. That keeps going up. They can increase take rate in crypto to kind of offset volume dips. This, events lever is something new that they can pull on to make more money. Maybe they increase cost of contracts at some point once adoption is fully in, and they can make more revenue off of that. Maybe they broker a new deal with Kalshi, like I said, or buy out so that they get all of the revenue on these events contracts. But we're in a regulatory landscape under Trump where regulation is going to be very lax, and I think Hood is taking advantage of that. And I think there's very little concern this is going to go away in the next 4 years for them. And I think within Trump's tenure, Hood will be making $100 million plus a year easily and within his tenure, if not per quarter. I mean, that sounds crazy, but as people get used to it and they roll out additional features, maybe they roll it into its own app, it's definitely going to change, I think, within their own app, because it's kind of obscure on there, honestly. Like, I go on there and like predictions markets, like I don't even see it. Like, it's just buried in the middle of the app and it doesn't really stick out. Maybe that's by design for now, but I don't think it'll stay that way. So it's just something considered. This is a massive market. Hood will expand internationally, and the international betting markets, I don't know what the laws and regulations are there. I'm thinking they're probably laxer than they are in the US because they're more progressive overseas. So this could be a much higher figure in the future. And you see the drawdowns here. I did a red highlight of kind of what happens during recession, since people are worried about a recession right now. The drawdowns are pretty big, but this is still a substantial amount of revenue that you see that occurs even in recessionary periods. So there's just another buffer for Hood, another lever, another way to make up a potential $50 million decrease in crypto, which I think is what's being projected right now. Like you're looking at $850 million for Q2 is what people were thinking. And I'm thinking based on crypto volumes, because equity and options volumes were still really high in April. As long as the economy doesn't completely fall apart over the next 2 months, I think those will be fine. I think the biggest hit area will be crypto. But like I said, I think they can offset that more than people think. And I think they did that this quarter. And a lot of people were underestimating their ability to hit the 920. I think they could still do 900 million plus next quarter. I kind of like the big drop in expectations for next quarter on EPS and revenues. All right. And then yeah, here I showed the crypto volume. I think they're thinking around 8 billion versus 10 billion in March to April, but it is starting to kind of bottom out here. I think we'll start to see 6 to 10 billion might be the norm in a non like bull cycle for crypto, for them in notional volumes each month. And if that's the case, then you're looking at 200-ish million in revenues, and which I think is fine. Like I said, I think they can offset $50 million easily going forward, and actually build on that with the new verticals that they've put into place, and with international. You know, I mean, we talked about them expanding, but they rolled out a lot of stuff in the UK, and Singapore is coming up at the end of this year, which I think will be a big market for them, because there's a lot of money in Singapore, which is why I think they're looking at it, and a lot of trading activity. All right. I'm sorry, my SoFi stuff. I guess we can look at this. This is the speaking of Buffett, we talked about him earlier, focusing on ROE and not earnings per share, which a lot of people look at it. Their earnings per share were lower this past quarter, but trailing 12 month is still going up for Robinhood on their return on equity. And I like to show it this way, like I did here in these charts where I do a rolling 4-quarter average, because it smooths out of a lot of the noise. Like brokerages are very cyclical. So you'll see lots of ups, downs, ups, downs, ups, downs. But if you do it over a rolling average over a year, it smooths out a lot of that noise, and you can kind of see where the trajectory is headed. If you look at revenue, net income, operating expenses, this is really what you want to see. Like there was a tick up in operating expenses this past quarter, like I said, which is why my net income was off and my EPS was off. But I don't think this is a trend that will just sustain. Like I think it might tick up a little bit and chop around, or even go back down, because it has been, over the last 2 years trending down. I think it's been getting easier for Robinhood to make money. This is ideal for any company, is this number going down and these numbers going up. I mean, it's as simple as that. All right, and let's talk about HIMS. So HIMS. Well, I work in pharma, first and foremost, and I've seen what I think is a little confusion on the deal that's structured with Novo. I've heard people say, and I've seen written, that this deal is going to allow HIMS to continue compounding and selling. That's not true. They are not allowed to compound. What they will be allowed to do is sell Wegovy, which is pretty much their third party to sell Novo Nordisk's product. It's still good. I mean, it's definitely better than not being able to sell anything in the GLP-1 space, or at least the semaglutide. Um, but there's a couple of things to realize here. Margins will be much worse. Even if they strike a good deal, which we don't even know the terms of the deal yet with Novo, them not manufacturing their own compounds and having to sell Novo's compound it's night and day. Like compounding these drugs, like this drug is very simple. I mean, it's a peptide. It's easy to make. Scaling it is kind of hard to do, but they were getting a much cheaper um, product when they were compounding, and they were able to sell it at whatever they wanted to sell it at, and they were able to take 100% of the profit. Now they are not compounding. Novo is making the material. Novo sends it to them, and they distribute on behalf of Novo. So this would be like buying a product off of Amazon. Amazon gets cut, but they don't get all of the revenue. And it's really going to come down to the deal that they struck with Novo, like what the take rate is. If it's really small, then it's not going to be a big deal for them, like revenue wise. Like it's not going to help them that much. Given that Novo has all the leverage, like they have FDA on their side, they own the compound, they have rights to the compound until 2027, I think, for Ozempic, and 2031 for Wegovy, which is the weight loss version of Ozempic. HIMS has no leverage in this. Whatever deal that they struck was all on Novo's terms. I honestly think this is more bullish for Novo because now they get access to the HIMS client base to distribute with ease. And I think this was a strategic play for Novo more so than HIMS. Like I think HIMS needed Novo more than Novo needed HIMS. But it will help them because Lilly, the tirzepatide product, Mounjaro, which is their weight loss version, terrible name. They could have done better with that. They will take a lot of the market from Novo. And I think what Novo is trying to do is get out ahead of that and get into this market with HIMS because it accesses all of their clientele and will get their product into their hands and will bump their revenues and maybe take some of the market share back from Lilly. And who knows, maybe even Lilly will try to distribute through HIMS at some point just so that they're present in that market. But I'd just say be careful. It's overly bullish, in my opinion, just based on the Novo news. The other thing with HIMS is their PE right now is like 77, which is really high. I mean, you look at Hood, which is another reason why I'm kind of hanging in the stock, and I like it now even more than I did 2 years ago, is their PE is getting smaller. And when they do have dips, it just becomes that much more attractive to me. And I mean, their PE right now is 27. I think the Ford PE is a little higher because it takes out the credit that they got last quarter, but it's still like 32. And they're growing crazy right now. You know, quarter over quarter, yes, they went down because of crypto, but I don't think that's a trend that'll sustain. I think this year, if we don't have a recession, Hood will probably hang out where it's at now, unless we go into like another bull cycle back to all-time highs. Then yeah, I could see it back in the 60s. But if earnings kind of start flattening out over the next couple of quarters until their new verticals, internationally, events, everything we talked about earlier, start ticking up and bringing revenue back up again, then I think, you know, it's kind of priced okay right now. When it fell to 28 a couple of weeks ago, that was the biggest no-brainer. Like the easiest trade in the world was to buy Hood at that time because the PE was like 20. And if we get another one of those scenarios, like I'm fine holding it through a recession because it's cyclical, and I know that the reasons it's dropping is because trading activity is going down. It has nothing to do with the value proposition that's there for Hood and the product that they have. Like I would love a recession as long as I don't lose my job and all my friends lose their jobs. I would love a light recession, just a smidge of a recession, um, to get it at a better value. Like I added some at 33. I didn't add enough in hindsight. I didn't really have that much capital to add because I'm pretty much fully into everything that I have right now, which may or may not be silly, but I'm looking at 10, 15, 20 years of holding stocks. So I don't really care what happens in the next year. I have a job. As long as I have a job, I'll continue to put money into the stock market every 2 weeks, and I'll keep nibbling the companies that I like. But going back to HIMS, talking about the PE ratio, I mean, it's also up, and I realize it did take a huge hit, and I think rightfully so because of the FDA decision. It's also up 46% in the past week. If you didn't already get into this, do not buy this Monday morning. I mean, you could get lucky, um, but short dated calls on Monday would be a terrible idea. One, the IV is going to be way too high. You'll probably get IV crush even if they do get a good earnings report. Shares is fine if you really believe in the company long term. But anything outside of shares, I wouldn't touch. I don't think shorts are entirely stupid here. $40, I wouldn't short it. At $60, $70, I probably would short it, given the news, unless some other news story came out. But I just don't see it. Like they're the second hand of this whole deal. Like it's just not a good deal. I mean, we'll see what the terms are. I don't think they'll be that favorable for HIMS. I think they'll benefit Novo more than they'll benefit HIMS longer term. I mean, like I said, it's good that they still have access to the space. Novo is a great company. They're very shrewd. They've been around over 100 years. So they're not dumb. If they made a deal with somebody, it's not in the best interest of whoever they're making the deal with. So we'll see. I know there's other areas in HIMS that are growing outside of the GLP-1 weight loss space, and I think weight loss is still expected to do pretty good. I mean, it's obviously popular. Look at the weight loss drugs. I think it's a fine company. I think it would be okay. I just don't expect to see this massive launch this week on earnings. I think right now it's priced appropriately, if not high, at a 77 PE. But we'll see what their growth numbers are. We'll see what they project. Yeah, they might guide up, but that'll be solely dependent on the terms of the deal. I'm really going to look at their margins and see what those look like, because right now, let's see what their profit margin is. So their gross margins were 77% last quarter. Let's see. Key charts. Yeah, probably worth looking at online revenue per subscriber will be one of the things I look at. And then what's their net margin? So their net margin in Q4 was 5%. Quarter before that, it was 19%, which is actually pretty good. I would be careful there. If you see like a negative net margin, that would be pretty worrisome. I think that's the area that's going to get most impacted by them selling for Novo rather than compounding and selling their own, distributing their own GLP-1 semaglutide. So yeah, gross margins have been around 70, high 70s, low 80s for like ever, all the way back to 2020, which is kind of crazy. But I don't really care so much about gross. I want the net. I want to know what your net is, what you're actually taking home. So yeah, 5.4 last quarter. We'll see. I think they'll be okay now because they're still able to sell through Q1. They were still able to sell through Q1, but their guide, and they're not going to guide margin, but a lot will be their guidance. And then next quarter, I think will be a big quarter because that's where you'll see kind of how the deal with Novo impacts them and if they're really going to be able to execute at the high level that they've been executing at for the last year. So yeah, that's my thoughts on the Hoods earnings and HIMS coming up this week. Be careful, be smart, stay safe out there, and I hope everybody has a great trading week. Talk to you later.